Hello and welcome to China Focus. I'm Shelley Zhang. On December 7th, the Canadian government approved a $15.1 billion takeover of Canadian company Nexen by Chinese company CNOOC. Now, CNOOC, that's the China National Offshore Oil Company, is one of China's three big oil companies. Now, the CNOOC is owned by the Chinese government, and this has been the cause of major concerns among many Canadians and even Americans. Here today to talk about this, we have in the studio Matt Gnezda, and over Skype, we have Epoch Times Parliament Hill reporter Matthew Little. Thank you both for joining us. Now, Matthew, the first question is for you. Now, the Canadian government, when they said they approved the deal, they also said they would likely not approve future deals like this. Why do you think they made that caveat?
I think that there's legitimate policy concerns there that the Prime Minister pointed to, namely that it's a relatively small group of companies that control most of the production in the oil sands, and with a few key takeovers by state-owned enterprises, foreign government would have an undue amount of control of that specific sector of the economy, and it's a real important sector, especially for this government. So they don't want to lose that open market characteristic in the oil sands.
Now, Matthew, you mentioned that this was a pretty divisive issue. Were there, do you think the Canadian government addressed the concerns that people had about it, or was there anything that they didn't address?
There were so many concerns that it would be very difficult to address all of them. I think they addressed the main concern of many critics that effectively Canadian assets were being nationalized by foreign governments. But there were a lot of specific concerns to CNOOC itself that the government effectively sidestepped by putting this bar on all foreign state-owned enterprises. And that has a lot to do with the nature of who owns CNOOC, which is the Chinese regime, and the abuses that CNOOC is linked to in China and Burma, in Tibet, where apparently the Tibetans in Canada were protesting the takeover because they said CNOOC directly, well, they funded in part the exile of Tibetan nomads. And Falun Gong adherents in Canada were saying that CNOOC security personnel arrested and detained practitioners in China and had them sent off to brainwashing facilities and detention centers. So the government doesn't address these types of concerns specifically. They don't raise any of the human rights issues linked to CNOOC, nor the espionage or influence concerns specific to Chinese state-owned oil companies. But that's always been a characteristic of just about any Canadian government in recent years, to kind of overlook the nature of the Chinese regime in dealing with these types of issues. Okay,
so Matt, I want to ask you, what does it mean to be a state-owned company in China?
Well, CNOOC, like other state-owned companies, CNOOC is wholly owned by the Chinese government, but the Chinese government is wholly run by the Chinese Communist Party. And so what it really means is that you have this very political organization, the party, which is controlling all the state-owned oil industry. CNOOC is not unique among all of them, but just to give you an idea of the degree of Communist Party control they have over these, is that personnel decisions are made by the Communist Party, not by the companies, and not even by the government. I'll give an example. In April 2011, there's three big China's state-owned oil companies. There's PetroChina, CNOOC, and Sinopec. And they basically, a year and a half ago, they did this very strange swap. One of the heads of PetroChina became the head of CNOOC, the head of CNOOC became the head of Sinopec, and the head of Sinopec became the governor of Fujian province. So, this is weird rotation. I mean, imagine the U.S. government switching the heads of, ExxonMobil and Chevron and Shell and just doing this rotation. That would never happen. But that's exactly what happened in China, because the Communist Party controls all the major personnel decisions, and as a result, they keep those companies in line and they control their strategy. So there's definitely a sort of a party strategic thing behind it, and these decisions are made at the highest level. The organization department, which is a Communist Party organ, is like a giant human resources department for the Communist Party. And the organization department basically makes these recommendations for who should be in charge of what, and then the Politburo, the sort of highest level 25 members that rule China, they approve these kind of decisions. So it's very much run by the party, and the party makes personnel and strategic decisions for the company. It's a little different than what you'd get in, say, a country like Norway, where it's government owned, but they don't have that level of political control.
So you wouldn't have like the Norwegian government like take one of their CEOs from an oil company and make them like suddenly a government position, is what you're saying? Yeah,
like you don't get that kind of weird swap like you do in an authoritarian dictatorship like in China.
Now, I want to ask both of you, and Matthew, maybe you can go first, if you think there's a higher strategic interest for the Chinese government, for the Communist Party in controlling the Nexen and Canadian companies.
Yeah, I guess that's a big question that looms for a lot of critics of this deal, is what is the long-term strategy? I think that there is, of course, a real hope amongst party officials that they can take this growing reserve that they've got and invested around the world in stable countries, stable democracies, places where that money would be relatively safe and maybe not subject to the kind of turmoil that China faces on an ongoing basis. At the same time, of course, energy is a backstone to development, and the regime needs it. It needs those continued inputs to further its own development, economic development in China. But then, of course, there's this whole question of how closely these economic purchases are tied with foreign policy considerations, and I think that's where the long-term strategic value of buying up major sectors in Canada or trying to purchase major companies in Canada comes into play. And that's just how much of an ear you get to the Canadian government when you're a major player in a critical sector or a sector of specific importance to this government. So, that's really where I think a lot of the concerns of the government are, as far as worried about what role a certain state would play in Canada if it could dominate that sector.
Yeah, and the U.S. government, had a lot of these concerns as well. In 2005, CNOOC put in a bid for Unocal. The U.S. government blocked it. The U.S. government's been concerned about a number of China state-owned takeovers. More recently, Huawei, a technology company, the U.S. government, issued a report warning that there could be some issues with that. So obviously the U.S. government has some concerns. The U.S. government is also reviewing this case itself because Nexen has some holdings in the U.S. Gulf of Mexico. It's got about 10 oil and natural gas platforms. Not a major part of the U.S. oil industry. It's less than 1%, but still the U.S. government is looking into it. And if the U.S. government doesn't approve it, then Nexen will have to divest in those assets. So there's definitely concern in the U.S. government as well, which has seen just in general in some sort of intelligence risks when it comes to state-owned enterprises, at least in certain sectors.
Now, CNOOC as a company has agreed to follow certain strict rules when it comes to the Nexen takeover. They've agreed to a lot of transparency things. They've agreed to do a lot of things to kind of assuage some of these concerns about a Chinese state-owned company coming in. Is it still possible to kind of deny a company when they've basically agreed to follow all these procedures?
Oh, so so CNOOC says, oh yeah, we're going to play by the rules, and we just believe them? Well, look at what the Chinese government did when it came to, for example, getting into the WTO. Oh yeah, we're going to follow the rules. We get into the WTO, and then almost immediately they start skirting the rules as much as possible. Intellectual property, currency issues, unfair, subsidies. So clearly, once you get in, once CNOOC gets Nexen, it's very hard to make them pull out. So as long as they agree to play by the rules now, it's much harder to do anything to them if they decide to, pull a WTO and decide to, skirt the rules as much as they can get away with.
So Matthew, we don't have a lot of time left, but I just want to ask you if you think the way the Canadian government addressed the CNOOC-Nexen deal assuaged any of the concerns that people had about it, and will this kind of open the door to more, Chinese investment in Canada?
I'll take your second question first. The Prime Minister effectively closed that door. He said this was the end of a trend rather than the beginning. And so from this point on, if they approve any foreign state-owned enterprises taking a controlling interest in a Canadian company, it would really contradict that position. So whether the Chinese regime tries to find other ways to kind of circumvent that restriction is unknown. Maybe they could go through third parties, or maybe it would open the door for Chinese companies that aren't state-owned to further invest in Canada. Who knows? But as far as that goes, I think that unless something dramatic happens to change that position, no, that's not the case. For the first question, public reaction has been really divided on this. People are very critical of the government for allowing the deal that were critical to begin with, while those that wanted the deal are critical for the government for closing that door. So those concerns that the critics had haven't really changed. There's not been anything really there to say that CNOOC isn't going to do some of the things they're concerned about it doing as far as environmental degradation or human rights abuses that it's engaged in other places continuing, or possibly even coming into Canada with practices that would be not desired here. So it's no, I wouldn't say that the people are necessarily eased by that restriction on future investment coming in from state-owned enterprises.
Matt, really quickly, do you think this will affect the U.S.?
I think that once CNOOC gets a foothold in Canada, it's a little easier for certain interests to argue that it's okay for Chinese state-owned enterprises to enter the U.S. or other Western countries. But it's also unclear. It also depends on sort of how CNOOC behaves. So I guess we'll just have to wait and see.
Well, we're out of time today, so thank you for joining us, and thank you, Matthew, for joining us from Ottawa. And for more on this and other issues in China, join us at ntd.tv.